Hey guys, end of week 11 of day trading. Right here back in my home with the library right behind me. This is my room here back in Hong Kong, and I'm just glad that I'm back home after this whole coronavirus thing. Also, I've been quarantined for I think 4 days right now. You see this badge right here? Yeah, those are for people who came back from overseas. They have to quarantine for at least 14 days. So I got 9 more days to go, which is another week. So for the next week, I'll be staying at home again, doing self quarantine, but also be posting videos on my trades and what I've done, and we'll go in depth on the techniques that I've used to take every single day trade every single day. I'm thankful and grateful to be back home. I like this journey. It's been, I think, 11 weeks in total. I think 11 to 12 weeks, which is almost 3 months of trading. My account has been going sideways, but this is natural because we're still at the survival phase of trading, and it's natural for beginners who are going through this first few months of trading to experience either slight downwards in their total equity amount or just sideways price action when it comes to the amount of money they have in their accounts before they can see consistent upward gains. Now, with the current coronavirus impacting the market, causing huge amounts of volatility in the foreign exchange markets, we have to be extra careful as to the types of setups we decide to trade and the types of setups we choose to, look at, because there's just it's just a mess, right? Generally, when a price hits at a particular level, it would make immediate moves, but due to the huge amounts of volatility, sometimes when price hits the level, it would go down a few more points, 4, 5, 6, 7, 8, 9 points before going back up. All these things are causing a lot of uncertainty, as well as price not being able to respect levels that we've set up. And since our strategy is a predictive strategy, we predict prices to reach a particular point before going down or going up. This strategy has not been of use and not been effective lately with what's happening in today's world. I think the outlook for this would be in the next 2 to 3 months, the continuous volatility in the market would still be high. We would continue to expect movements like these, so it's important that we stay safe, not just from the coronavirus itself, but also in our trading. Keep your assets liquid in cash, and only take setups that you are certain they would go up. High probability setups. Don't try to gamble for low probability setups. So this is pretty much just a intro. We got one trade that we took this week. I forgot which pair it was. We're gonna jump straight into the monitor, so stay tuned.
Alright guys, so back at the computer right here, we're going to go through our day trade. The only one day trade we took this week, which is the last week of March, heading into April. I think we have more faith in the markets. I think that the markets would, the volatility in the market would reduce. We've seen crazy amounts of volatility for the past 2 weeks, which was very, very difficult for us to take day trades. Unfortunately, we took one opportunity this week on Thursday, and we took a slight loss because we manage our losses when we take trades like this, and we lost less than $100, which is good amounts because usually my risk parameters is around $200, so I would risk $200 per trade, but since we lose less than that by moving our stop loss under certain circumstances, we are able to get out of a trade with minimal loss. Trading is very, very simple. All you have to do is align the probabilities on your side, either by having more wins than losses, or winning more than you lose for every trade you intend to take, if their percentage is the same. But what makes it even more powerful is when you have alignment, when you have not only a greater average win than an average loss, but the win rate is also higher than the losing rate. And so that is what I'm trying to achieve with this strategy. Alright, so let's jump into the recap for this one trade that we had. So it was on the 26th of March. We took this trade on the 26th of March, actually technically on the 25th. Now, if we look right here, zoom in a little bit on this price chart. Okay, so you see this level, prices on the 25th rose up on the Australian US dollar, pulled back a little bit, and then you saw an aggressive buying pressure on the upside. Now, by looking at this chart, we understand that there is significant amount of buyers stacked right here due to the aggressive push. Institutions like to accumulate their positions, in this case a buying position, while prices are moving sideways, so they get an good, average price, like a good average price, before pushing the market towards the high side. Now, generally when this happens, this is already when institutions have already gotten into their positions. So we believe that there are a lot of buyers stacked up right here. So by drawing the volume profile, we stacked it right here. Yep, around this level. By drawing the volume profile right here, we are able to identify the highest volume at this area. Now, last time when I drew this, it wasn't all the way up here. Instead, it was down here. But the indicator itself always adjusts, and so it's important that we take all possibilities into account. So this was the highest amount of volume where we determined on that day. This is the greatest amount of volume at this particular level, 0.5969. So we believe that as prices come back down and touch this level, it's gonna produce a buying action, as these buyers will be defending their positions. But what really happened was that as price came back down, they broke this level. You see, prices break this level. Now, unfortunately I got out with loss because it was a trade that we took and we didn't really succeed in. However, I missed another opportunity. Generally, in my strategy, when you lose a particular trade, there is always an option of taking a reversal. What is a reversal? A reversal, in essence, is instead of buying it along the upside in this direction, wait for prices to come down, retest this level, and then sell it, short it. Now, if we look at the 15-minute chart, right here, prices came down to this level, right? And our rule is that if prices move down by more than 10 pips, in this case it moved from 68 to 53, which is more than 10 pips, then start looking for opportunities to short when prices retest this level. Prices did retest this level, and if we shorted from there, it would go from 68 all the way down to 31, which I missed because I didn't see this coming. A lot of times I always look back and just think that every time when I lose a trade, my mind just goes, haywire. Like, I'm just always criticizing myself, self-sabotaging, questioning, why did I lose? Why did I not make this trade? What's going on? What's wrong? Did I make a mistake? All this stuff. Yet there's always a reversal trade. I know I've written this rule down on my trading manual, but then I just could never be able to look past the loss and say, hey, there might be another reversal opportunity around the corner. Let's wait for it and take that opportunity. I just don't know why I couldn't. I guess I'm just so ingrained in the emotions of losing. And I think the best way to really break out from this habit, when it comes to trading, starting from April, which is a new month, this goal that I'll set for myself is that whenever a loss happens, don't blame the market, don't blame the strategy. It's just a loss, right? look for reversal trades. Whenever I lose and I see a red candle, right? You see a red candle or a series of red candles bursting past the original level, or any opposite colored candles bursting through the original level. So if this case it was a buy, right? Since it was a buy opportunity, we would have red candles bursting through. If it was another opportunity, let's say right here, when it's supposed to be a sell but prices break above it, it will be green candles instead of red candles. So when opposite candles break through when either one opposite candle or a series of opposite candles break through the price level initially by more than 10 pips, immediately my mind has to activate. My mind has to switch and look for reversal opportunities on the other side. And the reason why reversal opportunities should be taken is because generally there's a lot of buyers at our level. In this case, a lot of buyers. When prices come back, touches this level, and if it doesn't go up, it means that at this level, sellers are stronger than buyers. And you need to have a lot of sellers in order to break this series of buyers. And if price indeed broke by more than 10 pips, it's proof that the sellers at this level has overtaken the buyers. And it means that there will be a lot of selling position right here. So when prices come back up and test this level, these sellers will be defending their positions and causing the price to go downwards. It's logical. Everything that my trade bases on are pure logic, pure supply and demand logic, but based on how institutions, get in and get out and how they manage their money in the forex market. And I'm just piggybacking their movements. But looking at this thing, it sometimes just really pisses me off that I can't take this opportunity, or I didn't realize this opportunity in front of me, even though I wrote it in my trade document. So I have this new mantra, which is, if you lose, think of reversal. When you lose one trade, don't freak. Think of reversal. Yeah. Think of reversal. Whenever I lose, think of reversal. Think and look and observe. See if the setup fulfills the reversal trade setup. If, for example, in this case, which was supposed to be a buy order, there's a red candle passing through, but along the initial push downwards, before reaching 10 pips, if I see an opposite colored candle, which is in this case, a green candle, right? If I see a green candle within the 10 pips after pushing down this point, then I would forego the reversal trade. So these are my rules. I hope April will be much better trading opportunity and trading environment for all traders doing day trading and doing similar styles of trading. This is the end of my recap for week 11. I hope you guys have a good day. Stay safe, stay strong, and good luck to everything. Peace out.